Hello traders, hope you're doing well. Thank you for watching my video. This is a video on the cup and handle pattern. So this is a candlestick pattern where we're looking to enter into a trend. Usually the cup and handle candlestick pattern is used for bullish trends. However, you do have the inverted candlestick, inverted cup and handle pattern for entering on bearish trends. For the purpose of this video, we're going to focus on a bull uptrend. So with the cup and handle pattern, basically does what it says. You're going to look for a scenario on your charts where there is candlesticks that form a cup with a handle. I'll show you what I mean now. This is a euro dollar 1 hour chart, and you can see here this range of prices form, I'll draw it for you now, a cup. Simple as that. Okay, it can be bigger, it can be smaller, but this is what you're looking for, basically a rounded area of that contains price, usually ranging. So once you've identified the cup, you're going to look for the handle. Okay, and we have the handle here, basically support and resistance. Okay, perhaps use that level. So this is our handle. Okay, so it looks like a cup, maybe a bit of a wonky cup, but nonetheless it's not going to be perfect every time. However, you get the point. This is basically the cup and the handle. So now that we have the pattern on the chart, how do you use it? Okay, well, probably the hardest part is finding it, which isn't really that hard, which is why it's good to be aware of this candlestick pattern, because it's quite easy to find on your charts, and whether you want to trade it on its own or in conjunction with other technical indicators, price action analysis, support resistance, etc., you can. For now, let's just focus on using the pattern as is. Okay, so what you're going to look for is to enter on this uptrend after breakout of the handle, which happens here. You just mark that there, and you can see there may have been a few people watching this formation, as price did jump up quite significantly after this handle level was breached. Okay, so we'll zoom in a bit and get a closer look at the entry. So you can see the handle touched, and the breakout here. This would have been a nice time to enter this trade based on this particular candlestick pattern. And you can enter either when price has a breakout, or you can wait for price to close on the other side of the handle for extra confirmation. Some traders may even wait for the pullback and enter later on. But for argument's sake, let's just say we trade the pattern as is, enter on the breakout. You can see there was plenty of potential to capture almost 200 pips in this move. You're not going to pick the top every time. However, you wouldn't have wanted to have exited prematurely, too early, and left all of that on the table, which is why I would have moved my stop loss from, probably would have started with it the other side of the handle, aka the resistance come support level, or let's just say the swing low for argument's sake. So that would have been around 20 pips, which is a relatively tight stop loss for the 1 hour chart time frame. and a good risk to reward ratio available on this trade. And then once price came up to here, you can either look to close some of the position, bank some profits, move your stop loss to break even, or you may just move your stop loss to, let's say, this level here, just under this support, lock in that profit there. In the worst case scenario, if price did turn around and come back down, you still banked some pips. But in the best case scenario, price continues upwards, you're in a good position to reevaluate your stop loss down the line. So if we did that and price jumped up here, I could have moved our stop loss again there. As price continued up, could have moved the stop loss again below that support level, basically trailed the price on the way up the chart. Again, as price went up here, you could have moved it there, and you would have been taken out if you were trading there, but still it would have been a good trade. 20 pips stop loss, over 100 pips, 5-to-1 risk to reward ratio is very good. Alternatively, if you just want to leave your stop at break even and risk, having a very profitable trade turn to break even, you can do that. The advantage with that is sometimes you won't get taken out prematurely, and you can exit based on either a fixed risk to reward if you're using that, or price action. I mean, when you see this resistance up here being tested, price didn't manage to reach that resistance level again there. Lots of bearish candlestick patterns. It would have been a good idea to exit either here or definitely here. As you can see, the market starting to go down. Okay. So that is an example of taking a trade solely using the cup and handle candlestick pattern. You can of course confirm with other indicators. Let's just say the ADX, average directional movement index. Zoom in. What this indicator does is basically shows you what direction the market is going in and the momentum. So when the green's above the red, suggests we're in a bullish trend. The plus above the minus, that is the green above the red, that's an uptrend, and vice versa. If the red is above the green, the minus above the plus, it suggests the market is in a downtrend. And this line here, the blue main line, is the momentum. I've marked level 20 because I say that I feel that when this line is above 20, it suggests that there's some momentum in the move. Some traders may use 25, may use 30. It's just that when price is below the 20s, tend to be in more of a range, as you can see in the cup. This range in the cup, main line was below 20. So unless you're trading ranges, you might want to avoid that scenario. Anyway, if we look at our entry, the ADX gave us good confirmation, and this would have been a trade we might have wanted to have taken, just because you can see green above red, good momentum. Divergence on the ADX is higher lows, suggests the market's moving up. Thing about indicators is sometimes they tell you what you can see by just looking at the charts. I mean, you could have just done that and you can see the market's moving up for yourself. You don't even need the line for that. But I understand some traders like the visual appeal and simplicity of indicators. And also we have this handy line here which helps with the momentum. Okay, so that would have been good confirmation to enter there. However, had you missed that initial entry, not to threat, you could have entered again, ADX crossover here. And you see the plus went below the minus and then crossed back up, suggested a pullback. Looking at the charts, you can see that pullback when it crossed back above, mainline still above 20. could have been an entry point based on the ADX there. You also have a hammer candlestick pattern. You do have as well resistance here. So the breakout, you can see from that big bar, it was a good breakout following on from that resistance level into the trend. ADX confirming entry on the breakout as well. So there are many ways you can trade the uptrend once you've established it. The key thing is with the cup and handle pattern is it can be a good way to identify an established trend. That's all well and good, but let's be honest, you could have just done that. You could have just done that and seen that we are in an uptrend. However, the handle did signify a good entry point into the trend. And another thing is a lot of traders might be watching patterns such as these so they can have a self-fulfilling prophecy, and it just saves you entering randomly like here. Not that you would, because you're not going to buy high, and well, you shouldn't buy high, but you know, if you want to keep things simple, you just mark the trend line, wait for it to be tested. It's tested 3 times there. You're close to the support level here, so entering around there would have been good as well. Okay. As I said, let's just remove the ADX. There are plenty of indicators you can use to confirm. Let's just put the MACD on the chart. Basically with the MACD, when price is above the signal line and above 0, it suggests that we're in an uptrend. So my chart's gone a bit messy. Let me just remove some of these arrows, some of these lines for you. Okay, hold on. Just keep the cup and handle pattern on there for now. Right, okay, so the MACD basically, as I said, when the bars are above the signal line of 0, it suggests an uptrend. And the momentum shows the momentum of the trend. So again, the breakout, oops, here wasn't it? So the breakout of the handle from the cup and handle pattern would have been confirmed with the MACD. Again, just for that extra reassurance, it's not necessary, but there may be instances where the MACD would be below the signal line, which would have kept you out of trouble. I mean, even back here, so that example I said of a bad buy trade, not that you'd buy high, but if you wanted to and you put the MACD on the chart, you can see it's already right at the top, so you may have been reconsidering that. Okay. The crossover there of the MACD was a good entry as well. There's just many ways you can filter your entry into the trend. Okay, you can see the MACD crossing below and then back above the signal line there. It's another entry opportunity, 70 plus pips. You know, probably wouldn't want to take this position here on the crossover just simply because the MACD is showing some lower highs diverging downwards. Market is losing some momentum, as you can see it does. Yeah, going back to this trade here, there's bullish divergence, so we may have been more comfortable with that. There's a million different ways you can time your entry. You can even use the indicators for exit points as well. Yeah, well, hopefully you found this video useful, and main thing is you understand the cup and handle candlestick pattern, what it suggests, and of course, you can use it on any trading instrument and time frame. I find the higher chart time frames, such as the 1 hour charts and above, tend to be more reliable, primarily because they contain more price data. And there is the inverted cup and handle pattern, which is basically an upside down version of this for downtrends, and I'll perhaps do that in another video shortly. Thank you for watching. Please like and subscribe for more.